At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met. From permits to paychecks. Ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
Good afternoon, investors. You are now on KleverStock with me, Dini, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front, Malaysian equities look set to maintain a horizontal trading pattern today as market participants search for fresh catalysts to establish clearer market direction. The local stock index closed virtually flat in the previous session as investors maintain a cautious stance pending developments in Middle East geopolitical tensions and clearer policy signals from the US Federal Reserve. According to Apex Securities, market expectations for a Federal Reserve interest rate hike in September have eased to 52%, down from 67% previously, against the backdrop of ongoing US-Iran geopolitical friction. Despite the broader uncertainty, the FVMK LCI gained 0.11% or 1.95 points to stand at 1,737.32 in early Tuesday trading. Apex Securities noted in its market outlook that while elevated crude oil prices and geopolitical developments may drive near-term volatility, resilient domestic economic fundamentals and selective institutional support should provide underlying market stability. The research house expects the local market to trade with a mild upward bias this week as investors focus selectively on fundamentally strong companies. In sector movements, technology counters are expected to extend their recent buying momentum, while utilities continue to attract defensive positioning and energy plays remain supported by elevated crude oil prices. Conversely, plantation and rate counters may stay soft after lagging the broader market. Early movers on the local bourse this morning include Gamuda rising 8 cents to 4 ringgit and 52 cents, YTL Power gained 8 cents to 4 ringgit and 76 cents, and IHH Healthcare climbed 11 cents to 8 ringgit and 46 cents. Among actively traded counters, Dagang Exchange dipped 0.5 cents to 49.5 cents, TWL added 0.5 cents to 2.5 cents, and AMS advanced 2.5 cents to trade at 48.5 cents. Moving on to our local currency and foreign exchange. The Malaysian ringgit opened mixed against a basket of major currencies this morning, while remaining range-bound against the US dollar as elevated crude oil prices and geopolitical developments provided underlying support to the greenback. At 8 a.m., the local unit traded at 4.0900 to 4.0975 against the greenback compared to Monday's close of 4.0885 to 4.0930. Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzanizam Abdul Rashid noted that the US dollar index gained 0.27% to reach 99.811 points. Tensions surrounding geopolitical negotiations and crude energy flows following the reopening of the Strait of Hormuz have bolstered dollar sentiment, offsetting earlier pressure from weaker US non-farm payrolls data. Dr. Afzanizam highlighted that conflicting signals in global markets where weak US employment figures compete with geopolitical headlines are keeping the dollar-ringgit pair bound within a tight trading range today. While softer US labor figures initially raised expectations for Federal Reserve rate cuts, safe haven demand and firm energy prices to continue to anchor the greenback. In cross-rate trading, the ringgit posted gains across several major currencies. The local currency rose against the Japanese yen to 2.5696 and strengthened against the euro to 4.7223, while easing slightly against the British pound to 5.5260. Across regional markets, the ringgit picked up against the Singapore dollar to 3.1943, edged lower against the Thai baht to 12.3921, and remained virtually unchanged against the Indonesian rupiah and the Philippine peso. Now for some economic news. Malaysia has launched the National Energy Efficiency Action Plan 2026 to 2025 or NEEAP 2.0, projecting cumulative utility savings of 85.24 billion ringgit over the next decade as the government works to curb national energy intensity and carbon emissions. Speaking at the 7th International Sustainable Energy Summit, Economy Minister Akmal Nasrullah Mohammad Nasir announced that NEEAP 2.0 targets an 11.6% reduction in overall energy demand by 2035. This represents a cumulative energy saving of 815,382 terajoules compared to business as usual forecast, and is expected to avoid 26,108 kilotons of carbon dioxide equivalent in greenhouse gas emissions. The second phase builds upon the success of the initial 10-year NEEAP, which delivered 60,886 gigawatt hours in total electricity savings, exceeding its baseline target of 52,233 gigawatt hours and generated approximately 16.1 billion ringgit in total cost savings. Improving demand-side efficiency has become a critical strategic priority for Malaysia as industrial expansion, regional data center investment, and structural clean energy transitions place growing operational demands on the national grid. NEEAP 2.0 operates across 4 core pillars: structured energy efficiency implementation, workforce reskilling and upskilling, sustainable financing mechanisms, and private sector investment mobilization. Supported by the Energy Efficiency and the Conservation Act, the plan institutionalizes energy management standards across industrial, commercial building, and domestic sectors through digital monitoring and smart thermal management systems. We will now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. Multinational conglomerate Sime Darby Berhad is anchoring its next phase of growth on core operational performance, regional diversification, and balance sheet discipline rather than aggressive new acquisitions. Speaking on the group's strategic direction, Group Chief Executive Officer Dato' Jeffrey Salim Davidson highlighted that Sime Darby's focus remains centered on extracting higher value from its core automotive and industrial equipment businesses across 18 Asia-Pacific markets. The strategy is already yielding tangible results. For the 9 months ended March 31, 2026, group net profit rose 10.9% to 1.44 billion ringgit on revenue of 52.8 billion ringgit. Third quarter core net profit jumped 55.6% to 263 million ringgit excluding one-off land sale gains. The automotive division has emerged as a primary growth driver, strengthened by the integration of UMW Holdings Berhad. Strong mass market sales through Perodua and Toyota in Malaysia, alongside leading EV market positions with BYD and BMW in Singapore, have helped offset price competition in China. In China, Sime Darby is streamlining costs and managing inventory conservatively while awaiting the launch of BMW's new class range in the fourth quarter of 2026. On the balance sheet front, improved operating cash flows and working capital management helped reduce finance costs by over 100 million ringgit during the first 9 months of 2026. Management emphasized that current priorities favor debt reduction and reinvestment into existing assets. Meanwhile, in the industrial division, softer short-term maintenance spending by mining clients in Australasia is being managed as a cyclical phase. Sime Darby remains bullish on long-term demand for critical minerals, particularly copper and battery materials supporting the global energy transition, positioning its equipment and after-sales networks to capture recovery upside across regional markets. Up next, we have a market update. Bursa Malaysia has issued a formal clarification confirming that oil and gas services provider Handal Energy Berhad has neither applied for nor been granted an extension of time to submit its outstanding annual report and financial statements for the financial year ended December 31, 2025. The exchange clarified that Handal Energy's monthly progress announcements should not be interpreted as regulatory extension granted by Bursa Malaysia. Under the main market listing requirements, Handal Energy faces potential delisting from the local bourse if its annual report remains outstanding for 6 months following its original due date, specifically by October 30, 2026. Handal Energy failed to issue its 2025 annual report within the 4-month window closing April 30, triggering a suspension in the trading of its shares on May 11. While the company has released monthly updates projecting submission by late October, Bursa Malaysia issued an official query on August 7 seeking detailed information regarding the progress of the audit process and greater clarity on the expected submission timeline. We will now take a short break, but we will return with corporate developments. Today's major corporate developments and deals across Malaysia. We lead today's corporate updates with power infrastructure provider MN Holdings Berhad. Its unit MN Utilities Engineering in a joint venture with Pembinaan Tajri has secured a 122.3 million ringgit contract from Tenaga Nasional Berhad to supply and install a new 132 kilovolt underground cable system in Penang. In industrial property development, AME Elite Consortium Berhad has been commissioned to construct a 220,000 square foot manufacturing facility in Iskandar Puteri, Johor for HYA Industry Malaysia. The specialized plant will focus on research, development, and high-precision production of aerospace components and medical orthopedic implant forgings. Meanwhile, in residential construction, Intabina Group Berhad secured a 115.7 million ringgit contract from Simdabi Property to construct 61 three-story landed homes at KL East. Turning to M&A and initial public offerings, Hexstar Retail has received a conditional voluntary takeover offer from its controlling shareholders at a cash price of 43 cents per share, representing a 7.5% premium over its last closing price of 40 cents on August 7. On the IPO front, power solutions provider United Asia Pac Berhad announced that its public portion was oversubscribed by 21 times ahead of its upcoming listing on Bursa Malaysia's ACE market. Rounding out corporate shareholding changes and legal developments, businessman Dato Eddie Ong Chu Meng ceased to be a substantial unit holder of Hectare Real Estate Investment Trust after selling 7.1 million units on the open market, reducing his stake to 4.998%. Elsewhere, Chinese national Zhang Jinding emerged as Econfirm Berhad's second largest shareholder, while Industronics Berhad disclosed that it is facing a lawsuit filed by a substantial shareholder over a loan agreement involving the company and specific directors. That's a wrap for Midday Roundup with me, Dini, on KleverStock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs.